What's up guys, Steven Dux here. Welcome to this week new YouTube video lessons, and today we're going to talk about my May monthly performance. And as you can see, I've made around 72,000 on the net profit right around here, and I paid around $4,000 in commissions. In this month it's pretty slow and compared to April. Well, April is even slower, and I only made around like 40k in April. There's literally no trades in April, and in this month is a little bit better. I think was in the middle of the month there's basically nothing to trade, and also this week. And also I'm going to talk about some of the trades you shouldn't take, and how to really stay consistent and profitable. Most of the setup I setting in, I always ask myself, well, what kind of pattern am I trading? If it meets my setup, I will go in. If it doesn't, I will stop trading and close the computer, close the platform, and leave it for the rest of the day. And that's how I'll be able to stay consistent, profitable, because you don't really need to stick in front of the computer for 24 hours or 9 to 8 hours. You only need to stay about like 45 minutes to 2 hours to look at the market. If the play fits your criteria, go ahead and play. If it doesn't, skip it, because most of the active stocks only happens in the first 45 minutes. So you can make all your judgments in before market open, so around 9:25 to 9:20. If there's no ticker that gaps around over 20%, it means there's no movements. You cannot really size into any tickers that doesn't really have any risk reward. In this case, I did my best to cut my losses. When I see the ticker has huge support, I wouldn't really go ahead and size it in. So let me give you decent examples. So right here was the ticker that SOLY. This ticker was trading like 22 million shares on the current day, and it started from $6. Before you trying to make a judgment of anything, go ahead and take a look at the 6-month chart and to see is there any resistance or is there any support. If the chart is fresh, if it's trading fresh volume, this is the first time the stock gets this much amount of volume, that means the stock is leaning towards to the bullish direction. SOLY, the starting cap was around 98 million. Now it's gapping up around 300%. There's literally no edge trading this. You only favors long and short. So if you're shorting into this consolidation breakdown or fresh chart trading this amount of volume, you will always get squeezed. People don't really respect the first green day. The second thing I'm going to talk about is OTLK. So if you look at the entire OTLK chart, right before it's about to spike around 60 million, 40 million shares per day, you had nothing. There's no historical resistance, there's no consistent resistance, there's only around 6 million shares traded at $18 area, but that's not really enough compared to the daily volume of 40 million or 60 million. So you have to kind of treat OTLK as a fresh chart. Now if you look at as a multi-day runner, if you look at closely in 15 days, around 2 minutes, and the chart was forming really strange. So first green day, gapping up, push, squeeze, and push again. So if you pay a close attention, there is a support around 230, 250 area, support around 260 to 70 area. So when I see people shorting in the 320 and they think the stock's going to go red and it's going to break the support, the thing is it's not going to break the support. If the stock is trading that much volume, 40 million, 60 million shares a day, there's enough support to hold the stock and cause a huge squeeze and start gapping up. And now on this day the stock went red, but it still didn't crack the support. This is the reason why I don't really short into multi-day runner that have layers of support. It's super difficult to crack. It needs massive amount of patience to be able to swing this. Sometimes swing doesn't really work. If you swing for a long time, you get to cover at 3.12, so you basically didn't make any money. For those kind of tickers, it's not worth it for your attention. So if you see those layers of support, and when people getting squeezed, let's say in the first green day or second green day, they are feeling revenged into the stock and they're shorting into any push. And when the stock goes red, they're shorting again. The thing is, the stock doesn't really have really good risk reward. So on OTLK, it's a no trade. Same thing with BIOC. If the stock trading around, let's say over 50 million shares on a day or 100 million shares on a day, I think this one traded around 70 million shares. Yeah. So with the stock trading 70 million shares on a day, it's super difficult to crack and it's super difficult to trade since the stock is so crowded. If it's a low float, the spread gets huge, and if it makes a major action, the stock drops about like 10-20%. On BIOC, there's no historical resistance. If you take a look, there is some resistance around 215-ish, but it's not really that heavy. When the stock traded that much volume of 70 minute, which is around 2 times or 3 times of the original volume or average volume, you have to kind of treat the ticker like a fresh chart. So anything that happened before did not happen. Just treat it like the stock is first time spiking. So that's the 2 key points. Don't short into multi-layer support. Don't short into stock is getting so crowded. Not worth the risk, not worth your time. Only focus on the best setups. And have a good news, guys. I'm hosting Orlando conference in August 17th, 18th, and 19th. So if you want to come to see me live trade, ask me some questions, here's the link below. You can click the link and get the tickets, and I will see you guys next video.